Hello, welcome to today's technical analysis. It's Friday, May 26. I'm Selena Nicholas, technical analyst at xm.com. Today we'll look at the dollar versus the yen on the daily chart. So we can see USDJPY remains stuck within the Ichimoku cloud after falling from a high of 114.36 that was reached on May 11th. And from here prices reversed lower due to reaching overbought levels, and that was indicated by the RSI rising just above 70. There is strong resistance now in the area between the top of the cloud at 111.80 and the key 112 level. Support is being provided by the 50% Fibonacci level. That's the retracement of the up leg from 108.12 to 114.36. And this level lies at 111.23. It's also where the 50-day moving average is converging on. USDJPY is neutral in the near term. We can see it's now in a range between these support and resistance levels. RSI is not showing any clear direction, suggesting there is a consolidation phase in the market at the moment. A break above the cloud would target 113. That's next resistance, with scope to rise further to retest the 114.36 high, and then from here resume the uptrend that started from 108.12. Alternatively, a breakdown of immediate support at 111.23 could lead to a deeper decline towards next support at the bottom of the cloud around 110, and this would confirm a top at 114.36 and turning the bias to bearish, especially if prices fall below this 110 level and below the cloud. But looking at the medium-term picture, the market structure remains bullish as long as USDJPY remains above the 200-day moving average, and especially if it holds above the 50% Fibonacci level. Thank you so much for watching. Have a great day.